move to IT, because IT is that big talking point, right? With the US Fed trimming rates by 25 basis points. What could this mean for LTIMindtree's growth and client sentiment? I put that question to Venu Lambu, CEO and MD of LTIMindtree. Listen in. I'm guessing that this couldn't have happened at a better time. We are talking a day after the US Fed has cut rates, signaled to more. In fact, the dot plot suggests another 175 basis points of rate cut. I mean, how does that mean for business spends and business confidence in the US, and thereby for your business, which has got a large exposure to the US geography?
Look, I think it was long waited, if I may say. So obviously, it's in a positive direction for the business overall, especially when you look at the historical commentary on discretionary spend has been a bit muted. So we'll have to see how that aspect of it unfolds with our customers as we go along. But outside of this, there are still areas where growth does exist. If we remain focused and if we reorient our capabilities towards the new growth areas, there are growth pockets which we can capitalize on.
And just trying to understand, what is your sense of the kind of business optimism that exists in key clients? Because I remember the first couple of quarters, I mean, I didn't speak to you, but a lot of your peers that I spoke to, there was, not in a negative way, but there was uncertainty about not knowing when is it that client confidence would return, etc. Are conversations still the same, or are they changing?
Look, if you look at our, part of the commentary, we had a promising start for the year. We had a good quarter one. And, as part of the commentary, I said that, there are opportunities in vendor consolidation, which are translating into very large deals. We announced one of the large deals in the quarter one, and I did mention about announcing another one very, very soon, and we are in that process. And the vendor consolidation is a big theme. The second is AI is at the core now, right? It's no more at the fringes, it's at the core. So there are investments happening in AI, and we are seeing a significant traction on AI native projects, as well as how you infuse AI into our existing capabilities. And the third one is about, look, I think there are still clients who have withheld some of the modernization projects so that they get ready from an AI perspective. And we see, depending on certain sectors, we see that there is some movement in that area. But as far as our commentary was at the end of Q1, I said, I'm reasonably confident of continuing our growth momentum. In fact, I went ahead and said that at some time in the second half of the year, we would like to see higher single digit or very close to the double digit year-on-year growth coming back to us, and also spoke about the margin enhancement for us. So, so that's how we are seeing. But it's extremely important that we remain focused on the core areas that we want to focus on, and also get fit in terms of our competitiveness, cost, and everything. And we're doing a lot of things around that area.
So you are on track for double-digit part one for the current fiscal, and could the Fed rate cuts and if there is enhanced US spending aid to that number?
Well, it's too early to call out that,
okay,
what impact it has. But, our plan of reaching very close to the double digit at some point of time in the second half of our financial year is pretty much intact, and we are on that track for that.
Okay, fair call. No, the reason again I kind of push this is because almost everybody says that in the current macro environment, because Mindtree, let's say LTIMindtree in the last 2-3 years, relative to some of the high growth companies has not done that. They're saying they're waiting for the evidence of the growth. What you are effectively saying that if you reach the double digit for the end of the year, and therefore the annual growth numbers could also look large, you kind of signaling to the street that you are in the top percentile or the top quartile of the growth band across companies.
Look, we focused on three things when I, started, my new role, right? One is about how we transform our sales organization to be very competitive and to make sure that we have enhanced productivity, we cross-sell, upsell to our accounts. That's a work in progress, and that's seen some good results. And there was a big focus on the large deals. And I mentioned about one large deal we announced officially, and there's one more we are working on, which I'm hopeful that we will announce it very soon as well once we cross the process part of it, right? So that part of it is going well. Second is we announced Fit for Future, which is about rebaselining our cost and getting competitive in our operations, and that was reflected in the margin that we delivered in Q1. And we also went about and said that you can expect 100 basis point improvement on our margin over the next couple of quarters. And again, I'm reasonably confident of sticking to that commitment on that. And if we continue all that, I don't find a reason why we would be very close to the higher single digit or very nearer to the double digit at some point of time in second half.
Well noted, and hopefully that will continue as well. The other thing is that when a lot of people are saying that, the other reason why Mindtree might be a great name to look at in this uncertain environment is that the minimal exposure to verticals prone to automation and disruption from Gen AI cycle. My question to you is, would you like being looked at that way, or are you saying that Gen AI, so on and so forth, all other measures related to AI, which is both implementing AI in the existing deals or new AI deals, that you are out there grabbing these and therefore not being disrupted by AI?
Look, even to win the large deals, Niraj, you need the AI capabilities, right? So I don't see, while there is an aspect of AI shrinking some of the existing engagements because you pass on the productivity benefit to the customer, so obviously it does shrink a certain category of revenue. But if you look at the larger picture and the potential that exists with AI, it's pretty huge. For the first time, we have a very unique opportunity to impact the cost of service or cost of goods of our customer, and that spend is very big. Right, that's why we launched Blueverse, our agentic AI ecosystem, which is geared up to look beyond the IT spend to essentially up our game of addressing the direct cost of goods or cost of service of our business, and that involves transforming some of the business process using agentic era or agentic enterprise concept. So I actually see AI as a great opportunity for us to accelerate our growth trajectory while we navigate some headwinds with regard to shrinkage of revenue of certain category of contracts and revenue, which you can't avoid it anyways.
Got it. So would it be fair to say that if the last decade and a better part of maybe this decade as well was employee strength and growth in employee strength equated to possible growth in revenues for an IT services firm hailing out of India, let's say, and I'm asking to wear the industry hat now, Venu, the next 5 years may not be that you may be much higher on the revenue front, but you may be lower than where you are on the employee count front as you stand right now. Could that be possible?
Well, it is possible. It is possible, even if we look at how we are trending, and we will see how in the next few quarters we'll be able to give more color to it. I don't think you will see so much of linear linkage of revenue with the headcount, right? And so it's not going to be completely non-linear as well. It'll take some time before we get into that curve. But definitely the direct linkage of the headcount and revenue is something which is changing and which will change as well in this journey.
Could it alter the operational metric bands that companies operated in? And the sector kind of operates in multiple bands, right? Some companies 13, 14, 15%, some companies 20%, some companies much higher than that. But every company might have the sweet spot which they are choosing. They want to operate at on the operational metrics. Could those bands as a piece move higher or lower from where they are for each individual company over the course of the next 5 years?
Look, it's difficult for me to comment across the companies, but I can talk about ourselves where, from our vantage point, we're already on the journey, right? So we expanded our margin in Q1, and we are committing to expand margin over the next 2 quarters on 100 basis points. And as we start remodeling our business and transform into being a leading player in the agentic enterprise era, whenever there is an opportunity for us to monetize agents and have the non-linearity of revenue and the headcount, we'll capitalize on that. And it's too early to make a very definitive commentary with regard to the margin on that, but in the near term, there is definitely an improvement opportunity, which I've been very candid in sharing that.
Got it. Now, if I kind of try to extrapolate what you've done in Q1, on an X revenue growth, you had a X plus Y margin and X plus Y plus Z profit growth. Simply put, you are telling me that the numbers on the revenue front itself will grow as you go towards Q4. You're talking about 100 basis points margin improvement, if I'm not wrong. And thereby, am I to believe that what you will do when you hit the end of the year on a quarterly basis on the bottom line will be significantly better than what you probably started the year with as well, which is also a great number, by the way.
Yeah, look, I think if you look at 100 basis point improvement on the Q1 number that we achieved, definitely yes, it is significant. From where we were in Q4 of last year, and considering it's an improvement further on the Q1 numbers, it's a significant movement, is what we see it as. And that's what the Fit for Future program of ours is delivering. And not just that, our focused on large deals and being focused on reinventing ourselves in the agentic era enterprise, at the back of our Blueverse ecosystem. These are the things I'm confident of, fueling the growth along the lines that I shared.
Got it. And just trying to probe that a bit, this is happening with client conversations the way they are, which are maybe not buoyant, but let's say confident or getting confident. If they turn buoyant, which is the client conversations and their ability to spend, these numbers could only improve, I presume.
Well, I don't know how the buoyant mood sort of translates into, but I can only say that the new normal of client spending is being very focused, is doing more with less, and enhancing productivity, is redefining the vendor landscape in their ecosystem, achieving a different price points. These are the new normal imperatives. So it's, and these new normal imperatives are here to stay. So we have to realign ourselves to deliver higher productivity, a better price point, and help the customers to enhance their productivity in their business process using AI at the core of it, and help our clients to redefine their vendor landscape, which is ready for the future. So, we are focused on those imperatives, and those imperatives will only get strengthened with time, because the clients are reconfiguring their spend, they're reconfiguring their supply chain, they're reconfiguring their talent ecosystem. So we want to be part of that reconfiguration.
Okay. Final question. A lot of conversation around how IT companies are returning capital or giving returns to all stakeholders, right? Buybacks come right in the mix of things. At the same time, what also comes in the mix of things is IT companies' ability to spot inorganic opportunities in order to enhance AI, modern offerings, etc. Which side do you veer on? I mean, it's great to have buybacks and dividends, by the way. It's great for shareholders. But at the same time, would you as a company believe that over the next 5 years, there'll be higher opportunities to deploy cash in growth opportunities, or will status quo prevail?
Well, to some extent, I feel that we are a bit self-critical to our own innovation history and, what we deliver as an innovation to our clients, right? I mean, to be honest, the kind of work we do is, with our clients, we partner with them for some of the breakthrough innovation as well. And there are significant, if I talk about LTIMindtree, we have a significant investment done on our Blueverse agentic ecosystem. We have a very large team which is focused on innovating the new form of agent, which I actually call as our digital employees. In fact, we onboarded 1,000+ digital employees in this quarter. So, so all that innovation is happening, and there is an investment that is earmarked to make that investment. So I don't think, we can just criticize about by linking it to the dividend or to the share buyback. There are aspects of, creating value to the shareholders, and that needs, that has its own journey and its track. But at the same time, with the muscle that we have, or the kind of intelligent talent that we have in our ecosystem, great clientele base that we serve, access to the technology through our partner ecosystem that we have, we are already innovating, and and that's happening, and we have done it in the past as well. As and when there has been a technology curve that changed, we have been innovating in that part. But obviously, the innovation, what it means to each commentator varies. But as far as from our perspective, I think we are innovating. Is there a chance to do more? Absolutely, yes. Is that is there anything with regard to the dividend as a constraint to innovate? Absolutely no. So I look this as to a sort of a separate topics to sort of debate on, but not necessarily to link it.